How many cryptocurrencies does Goldman Sachs hold? Is it really Goldman Sachs holding them, or is it on behalf of their clients? And how have these crypto positions evolved? I'm going to break all of that down in a second, but we're also going to talk about a major announcement from a new blockchain, LayerZero. LayerZero, they just announced they're launching their own blockchain. We'll talk about Tether's investment in LayerZero. I'm going to tell you about Robinhood. We'll also talk about SafeMoon, and we'll talk about strategy and a whole lot of other projects. Hello, everyone, and welcome back to Crypto Red, the crypto news channel. Let's jump straight into Goldman Sachs because this just dropped. We finally got numbers on how much crypto exposure Goldman Sachs have, more precisely how much crypto ETF exposure they're holding. Here are the figures. They hold $1 billion in Ether, $1 billion in BTC. This is all in ETFs. And like I said, $1.1 billion in BTC. They also hold $153 million in XRP ETFs and $108 million in Solana ETFs. Now, important detail, these aren't coins Goldman Sachs is buying for itself, like Goldman is buying BTC. It's more they technically just hold the position on behalf of their clients. So what this really means is Goldman's clients want crypto exposure, but the allocation is still tiny. We're talking about 0.33%, 0.33% of all assets held at Goldman Sachs, so it's small. And that actually shows how much room there still is for crypto to grow inside traditional finance. Personally, I think this allocation is going to grow a lot. And I'm not talking about a simple 10x, and that's it. In my opinion, in a few years, it's not crazy to imagine 5%, 6%, 7%, even up to 10% of a bank like this being allocated to crypto assets. I genuinely believe we can get there. And if we do, just imagine the size of the crypto market in that scenario. Now, according to the data we're seeing, there's actually been a decrease in this position. And honestly, that's a little surprising because ETFs holders usually don't trade this product that aggressively, but the numbers are what they are. A 39% drop in BTC ETF exposure over 1 quarter and 27% drop in ETH exposure. So yes, there was some selling from Goldman's client, but I'm not too worried about it. I mean, just look at the market right now. Obviously, some people are selling. You don't get price action like this without selling pressure. It's classic volatility. Let's move on. Check this out. LayerZero, the interoperability project, basically a bridge-style infrastructure, originally built around token format that let assets move from one chain to another in a really smooth way. They just announced their own blockchain. They're calling it Zero. They've got some big names investor back in this vision, and notably Tether, which just invested in LayerZero. It's not surprising also because Tether relies on LayerZero for USDT Zero, which is their interoperable USDT that can move across a bunch of different blockchains. Now, this new LayerZero blockchain is aiming to be extremely high performance. They're claiming some wild numbers, and I'm going to show you here in this article, which is pretty dense. It's full of technical terms everywhere. They're claiming 2 million transactions per second. If that's real, it would literally be the fastest blockchain in the world. They're using a lot of zero knowledge type tech and a bunch of other things to try to achieve that. I want to see it in practice because it sounds complex and it's pretty rare to see an interoperability project successfully pivot into launching its own L1 and actually pull people in. At the end of the day, it's just another blockchain. And we have to be honest about something. The main limitation right now isn't raw blockchain performance. It's actual usage and real demand behind it. Take Mega 8. They just launched recently, and it's a chain that can handle a huge number of transactions per second. They ran tests where they pushed it to at least 25,000 to 30,000 transactions per second, and the target is 100,000 transactions per second. But right now, though we're just sitting around 40 transactions per second because there is just not that much usage yet. And the reality is it's very hard to create an actual need around blockchain for high number of transactions per second. That's why even if they manage to reach 2,000 transactions per second or even more, the real question is, or 2 million transactions per second, the real question is there actually a need for that number of transactions per second? Anyway, that was some news I was not expected. The LayerZero token went up after that announcement, almost 30%. So the market clearly liked the news. LayerZero now has a market cap just shy of $500 million and FDV of $2 billion, which is huge. Wormhole, which is a more direct competitor, has a much smaller market cap, around $100 million. So yeah, that's a lot less. Next, let's stay on the blockchain on L1 topic and L2s and talk about Robinhood. You know, the stock trading giant that moved into crypto a few years ago. They've just launched their own layer 2 as well. It's live on testnet for now. It's called the Robinhood chain. It's based on Arbitrum's technology, but it's a full-fledged layer 2 in its own right. It's not just something built on top of Arbitrum's L2. It's its own blockchain. It's built on Ethereum. They want to launch tokenized stocks and a lot of things related to their core business on this chain, basically modernizing their business through blockchain. And yeah, I think that makes sense. That said, it's still an L2. So we recently saw Vitalik's opinion about L2 that simply improving performance isn't enough. But I think Robinhood's approach is different. They want to build an L2 they fully control, something that's more like an extension of Robinhood itself. So it's not going to be fully decentralized. I'm pretty sure about that. It's a publicly traded company, so they have obligation and constraint, and they want to keep control while still benefiting from the Ethereum ecosystem and potential future interoperability features. In the end, I think this kind of L2 probably has the best chance of surviving long terms, the ones backed by companies like Coinbase with Base, or for example, that can bring their own users directly into the layer 2 while maintaining control, or L2 that are truly differentiated, like Aztec, where privacy is built in, or StackNet, which has its own programming language and different technical approach. Those kinds of projects have a real edge. I'm more pessimistic about more generic L2s like Optimism, for example, or even Arbitrum to some extent. Although, to be fair, they do offer the possibility of using other programming languages besides Solidity on their L2, which does add value. But the generic do-it-all layer 2 that basically replicate Ethereum with just more transaction per second, I think that's going to become harder and harder to market as Ethereum increases its own capacity and keep fees low. Now, let's talk about SafeMoon. Do you remember SafeMoon? That kind of meme coin or shit coin that from a few years ago. It launched with a very strong community. And if I remember correctly, there was like a 10% tax on every transaction. It went up massively at first, and then, of course, it crashed hard. While the CEO of SafeMoon has just been sentenced to 8 years in prison. I asked myself why, because technically launching a shitcoin isn't illegal. Even pumping it isn't necessarily illegal, as long as there's no actual criminal activity involved. But what they're accused of is related to that 10% tax. The allegation is they diverted that 10% tax to buy cars and house for themselves, the CEOs and other founders. And when it wasn't supposed to be used for that, it was meant to be redistributed to holders and used for the ecosystem, not to fund the president's lifestyle. And that's why he was convicted. He was 25 years old at the time. I looked into it a bit. His parents worked at the CIA. That was his lawyer tried to use as part of the argument, basically saying we should be lenient with him. The poor guy, his brain wasn't even fully developed at 25, and his parents worked at the CIA. Still, he ended up being sentenced to 8 years in prison, and he also has to pay back several $1 million. They seized a lot of assets, also lots of sports cars and stuff like this. So yeah, this is a reminder. If you're creating meme coins, be very careful about what you promise to your users. Creating a meme coin with zero promises isn't a problem in itself. It's just a meme coin. Look at Trump. He launched a meme coin and is not going to jail because of it. Maybe for other stuff, but not because of this. As long as things are clear from the start, for example, if Trump's own if Trump owns a certain percent of the supply of his meme coin, which he does, and there are no promises that the token will be used for some grand utility, no hidden tax or fees being reused or something else, if there's truly no utility and no misleading claims, that's not an issue. But the moment you start diverting funds that were supposed to be used for buybacks, for example, then it's become a real problem. Speaking of Donald Trump and the United States, there's still no agreement between banks and the crypto companies in the US regarding the new crypto legislation. Banks are still refusing to allow any yield on stablecoins. That's becoming a serious sticking point. I honestly don't know how this is going to end. The White House is putting pressure on both banks and crypto companies to reach a deal, but they're not getting there. So there's a big question mark over what happens next and how this will all end. Then you have Michael Saylor trying to reassure everyone. Michael Saylor, who's at the head of Strategy, the company that has accumulated tens of billions of dollars worth of BTC. And by the way, Strategy is currently sitting on about 5 billion unrealized loss compared to the price at which they bought their Bitcoin. He went on TV and basically said, listen, we're not planning to sell our Bitcoin. We're going to keep buying Bitcoin. I think we'll buy Bitcoin every quarter forever. He also said, look, we have 2.5 years of cash to cover all of our debts and the payment we're committed to. So we can, stay like this for 2.5 years. And even if it drops, if BTC drops, we're not worried. Even if Bitcoin fall 90%, we'll find a way to refinance our debt. He said even if Bitcoin, if he even said Bitcoin would have to drop around $8,000 before they start having real problems. And at that level, he claimed they would simply refinance the debt and it wouldn't be an issue. He basically said they're ready to see BTC go to zero. Although, of course, he added that he doesn't think it's going to zero. He doesn't think it's going to $8,000. He's still extremely bullish. Now, let me give you my opinion on Strategy. I think that if Bitcoin stays around $68,000 or even $50,000, it probably won't be a major issue for them. The real problem starts if the discount on Strategy stocks become very large compared to the amount of Bitcoin the company holds. That's where I think activist investors could step in. Investors who might buy Strategy shares, apply pressure, demand a vote, and push to sell some of the Bitcoins to unlock value. That's when it could get complicated. And remember, Michael Saylor is no longer the majority owner of Strategy. He can't just do whatever he wants anymore because he sold equity and the voting power to raise money to buy more BTC. So there is a real risk of losing control. It's hard to estimate when something like that could happen, but if the stock trades at too large a discount for too long compared to Bitcoin, that could become a serious issue. And finally, we have SBF asking for a new trial. He wants to be retried. He claims some things weren't handled properly, that certain witnesses should have testified but didn't, and is hoping to get another chance in court. Honestly, I don't believe it's going to change anything. What was done with users' money was illegal. Even if some of the investment turned out to be good ones, for example, he invested in Anthropic, and that investment would now be worth tens of billions of dollars, that doesn't justify what he did. It's not because it was a good investment that it makes it legal. He used user funds to make investments he had no right to make. He lent money internally, moved funds around, and did a lot of very questionable things. So no, I don't see how that changed the core issue. That's what I wanted to share with you today about the latest crypto news. I hope you enjoyed the content. If you did, don't hesitate to like, comment, and subscribe, and I'll see you tomorrow for another video. Bye-bye, take care.